Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 2nd of February 2020, and yesterday we published our gold and silver weekly update for the week ending the 31st of January. And if you haven't had the opportunity to listen to it, we've placed a link in the description box below. Now, in that video we pointed out that amongst other things, Brent Crude prices closed last week at $56.62, down $4.07 on the week, and WTI Crude closed at $51.56, and that was down $2.63 on the week. This fall in price is primarily blamed on the effects from the coronavirus and is causing Saudi Arabia some concern, as it is claimed prices much below $50 a barrel caused them financial difficulty. Not because of the cost of extracting oil, as they are one of the lowest cost producers, but because of the financial commitments they have on spending these oil proceeds or profits. So let's take a brief look at a Bloomberg article, which was updated yesterday evening. Bloomberg Article, originally dated 31st of January 2020, but then updated 1st of February 2020, 9:15 p.m. GMT. By Grant Smith, Olga Tanas, and Javier Blas. Headline: OPEC Plus weighs emergency response as oil slumps on virus panic. OPEC and its allies considered how to respond to a plunge in oil prices, with Russia signaling for the first time it was open to Saudi Arabia's push for an emergency meeting. Potential dates being discussed are the 8th to the 9th of February and February the 14th to the 15th. Though for now the next regular meeting on March the 5th to 6th remains on the schedule, a delegate said. For days the kingdom has been pressing to bring forward a meeting of the coalition as the threat to demand from Asia's coronavirus pushes prices to a 6-month low. Russia has been rebuffing the requests and even on Friday said more time was needed to assess the situation, yet added it was willing to convene and even act if needed. OPEC is holding a meeting of technical representatives, the Joint Technical Committee, on Tuesday and Wednesday to assess the coronavirus effects on markets, according to delegates. Quote, "In principle, we're ready to react on such things," unquote. Interfax reported Energy Minister Alexander Novak saying on Friday, "But for that we need to assess the situation more accurately, monitor how it will develop in coming days." Crude traded near $51 a barrel in New York on Friday after a slump of about 16% in January, leaving prices far below the levels most members of the Organization of Petroleum Exporting Countries need to cover government spending. China is the oil market's primary source of demand growth, and measures taken to slow the spread of the coronavirus, including a lockdown in one of the country's major cities and the unprecedented extension of the Lunar New Year holiday, could wipe out a big chunk of that additional consumption. Consultant Energy Aspects Limited said OPEC is considering a proposal to deepen current production curbs by about 500,000 barrels a day, though there's no consensus on the idea yet. As OPEC and its partners are already in the midst of steep production cutbacks, many analysts are skeptical on how much more they're willing to do. The group unveiled a new set of supply curbs just over a month ago, which only came together after considerable diplomatic wrangling. To implement these, Saudi Arabia has already slashed production to the lowest since 2014. Russia, which has become the most important producer in the coalition alongside the kingdom, has typically taken some persuading to sign up for additional cuts and has a patchy record of implementing its pledges. The government in Moscow requires lower crude prices than the Saudis and most other OPEC countries to cover its spending plans. Still, the alliance with OPEC has served the Kremlin's political and economic interests, with Russia consistently one of the biggest financial beneficiaries of the deal. If the Organization of Petroleum Exporting Countries and its allies were to agree on an early meeting, history suggests that it may result in further action to defend prices. The last hastily convened gathering in Algiers in late 2016 is where the OPEC Plus coalition was first created. At the previous emergency meeting in 2008, the group reduced output as the global financial crisis slashed demand. Quote, "Nothing concentrates a producer's mind more than the prospect of a crude oil price bust," unquote, said Bob McNally, president of Rapidon Energy Group in Bethesda, Maryland, and former White House oil official under President George W. Bush. The risks of inaction could be severe. The plunge in oil prices has been mitigated by the halt of exports from OPEC member Libya, where a militia leader, Khalifa Haftar, has blockaded oil ports while haggling over a peace settlement with the national government. A resolution there could restart the flow of about 1 million barrels a day onto world markets, sending prices even lower. There are already signs that physical oil markets are coming under pressure, as the premium on prompt Brent Crude contracts versus later deliveries begins to diminish. End of article. Now, those who've been with us for some time may remember that back almost 2 years ago, oil prices were plummeting, and many were forecasting that its price would fall below $20 a barrel, and some were speculating as low as $10. We stated quite emphatically that prices were going to rise again from their then current $30 up to $50, and they'll vacillate broadly between $50 and $60, because we knew this is where the equilibrium position holds in terms of acceptable profitability. After all, this market, above all, we would argue, is most certainly rigged, and legally as well. However, late last year, we also pointed out that the world is actually becoming awash with oil, and with the United States being self-sufficient due to fracking in the main, and the world attempting to move to so-called greener alternatives, we will see prices fall to the bottom of our $50 range, and in the not-too-distant future, lower again. Not necessarily down to $20 or even $30, but eventually there will be a new range set for the next couple of years between $45 and $55, occasionally dipping below this low and occasionally exceeding this high, but generally maintaining that range. This may be one of the last opportunities that OPEC will have to truly dominate this marketplace, and frankly, does so now only with the acquiescence of the United States. What interests us particularly about this issue is that oil is used in industry and in mining, and we can foresee the costs of gold and silver extraction possibly reducing should these prices fall, but also so will the rate of inflation. And this will cause the Fed more headaches when it has already admitted to attempting to stimulate the economy to achieve an average inflation rate of 2%. So if we do see oil prices moving down even further, this may indeed influence the Fed to reduce rates sooner than they would wish or have indicated. Let's just wait and see. But please do share your thoughts, and if you haven't already done so, kindly subscribe to this channel, pressing the bell sign so that you may be notified of new videos as and when they are published. Now, before we end this podcast, we've also carried out an experiment by creating 2 new YouTube channels. The first is mainly for Trump supporters or those who are interested, and therefore not necessarily a supporter, in Trump's progress during the 2020 election. And the second channel is a 10-minute discussion that I will have with Controversially Greg on a regular basis on subjects outside of the gold and silver arena. You see, we're going to introduce a number of changes to this channel over the coming weeks, and we'll be beefing up considerably the services and products we are offering to Inner Sanctum members, especially the paying ones. So with this in mind, we shall be using the side channels for those areas of interest that may appeal, but not all of our Illuminati Silver members want to follow. So we ask that if you are interested in Trump 2020 or in conversations between Greg and I discussing non-precious metal or economic financial issues, then please click on the links at the top of the description box below, or those I've placed as the lead comment to this video. We shall also be publishing those links in future videos throughout this week, just in case not everyone will have listened to this one. Thank you as always. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.